Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. Let's get started. We begin with some exciting news from Germany. In the first half of this year, Germany's exports surged by a remarkable 3.3%. Simultaneously, imports experienced a 4.3% decline, resulting in a record-breaking export surplus of 98.7 billion euros. Now that's what we call an impressive performance. Shifting our focus to the euro area, we observe a somewhat nuanced economy landscape. The economic outlook has weakened due to lower domestic demand, influenced by high inflation and tightened financing conditions. This impact is particularly noticeable in manufacturing output and investment. However, the services sector is displaying more resilience. While the labor market remains strong, there is a potential for a slowdown in unemployment, as the energy crisis subsidies the timely rollback of support measures is recommended to curb inflationary pressures. The Europe Group underscores the importance of productive fiscal policies and debt reduction, along with initiatives like the Next Generation EU program to bolster supply capacity and facilitate a greener transition. Moving across the Atlantic, in July, the Consumer Price Index for all urban consumers increased by 0.2%, mirroring June's figures. Over the past year, the overall index rose by 3.2% before seasonal adjustment. Economic observers are closely monitoring these numbers for implications on various sectors. Shifting our focus back home, Turkey has witnessed a 9.6% unemployment rate in June, accompanied by an employment rate of 47.8%. These figures are crucial indicators of Turkey's economic health, reflecting the state of the labor market. Let's explore the world of entrepreneurship. Do you know which are the best countries to start a business in 2023? The Czech Republic takes the lead with its affordable business procedures and labor costs. Finland follows closely, boasting a happy populace that contributes to favorable business outcomes. Sweden secures third place, driven by low startup costs, a strong GDP, and moderate living expenses. Estonia and Slovakia trail behind, both offering startup costs equivalent to just 1% of GNI per capita. The UK grabs the sixth spot with free startup procedures and a competitive 19% business tax rate. The Netherlands stand out for its quality of life, even though it faces higher labor costs. Rounding out the top 10 are Austria, Denmark, and Portugal, offering diverse opportunities for budding entrepreneurs. Move on with a comprehensive analysis from the ILO Monitor's 11th edition. The report uncovers a striking disparity in global employment trends. Low-income countries face a staggering 21.5% jobs gap, while high-income nations experience an 8.2% gap. Social protection proves to be a crucial factor in fostering recovery, particularly in light of various shocks and risks. The challenges arising from high inflation, interest rates, and debt distress complicate matters further. Although global unemployment is projected to dip below pandemic levels in 2023, the divide between income groups remains significant. The projected global job gaps stands at a staggering 453 million people, underscoring the urgency of addressing this issue. Our focus shifts to France, where the second quarter revealed a rise in the unemployment rate to 7.2%. With 2.2 million unemployed, the long-term unemployment rate held steady at 1.8%. On a positive note, the employment rate for individuals aged 15 to 64 remained stable at 68.6%, marking the highest levels since 1975. Next up, let's talk about Finland's industrial output. In June, we witnessed a decrease of 3.3% in seasonally adjusted industrial output compared to the previous month. Additionally, day-adjusted industrial output plummeted by 6.1% compared to June 2022. These figures highlight the complexities of the current economic landscape. Moving on to the Economist Intelligence Unit's Global Livability Index. For the second consecutive year, Vienna claims the title of the most livable city in the world for 2023. Cities like Melbourne, Vancouver, Osaka, and Auckland follow closely, praising factors such as diverse cuisine, cultural experiences, affordable living, and safety. Auckland's surge in culture and environment scores stand out, while Osaka's affordability and security enhance its charm. And going to the UK, we witnessed remarkable wage growth. UK wages have surged at a record annual rate of 7.8% between April and June, marking the highest since 2001. Despite this growth, inflation remains relatively high at 7.9%, impacting real pay recovery. The Bank of England might respond with a potential interest rate increase in September as strong wage growth persists. The labor market, however, exhibits a cooling trend, with unemployment rates rising from 4% to 4.2%. Let's dive into emerging markets dynamics. Easing growth momentum has resulted in subdued price inflation across these markets. July's PMI in the US reveals the slowest expansion in 6 months, primarily driven by service sector growth as manufacturing stalls. Rising borrowing costs, trade weaknesses, and inflation are impacting global economic growth. Although emerging markets remain resilient, confidence is showing signs of decline. Going to do India, where inflation rates have exceeded expectations, reaching 7.44% in July. This figure represents the highest level since April 2022, highlighting the challenges posed by rising consumer prices. Let's turn our attention to Portugal. In the second quarter of 2023, the labor cost index in Portugal recorded a year-on-year increase of 3.5%. Next up, a compelling analysis by the Center for Economics and Business Research unveils the consequences of the UK's abandoned VAT refund scheme for international visitors. The decision to scrap this scheme has resulted in a staggering £10.7 billion loss in GDP and a significant decline of 2 million foreign visitors annually. CBR's findings suggest that reinstating the VAT-free shopping scheme could stimulate the economy by £2.3 billion in 2023. This study highlights the ripple effect of economic dynamics, as each refunded sales tax pound translates to £1.56 in other taxes due to dynamic economic effects. The call to reconsider this tourist tax is echoed by over 350 business leaders. Moving on to Hong Kong, we observe fluctuations in external trade dynamics. June witnessed a substantial decline in both export and import volumes by 14.7% and 15.2% 8.5% respectively compared to the previous year. Simultaneously, the prices of total exports of goods and imports of goods marked an increase. Across the globe in Russia, we observe a significant economic move. The country has opted to increase its key rate by a remarkable 350 basis points, reaching 12%. This decision holds implications for Russia's financial landscape. Shifting our focus to Montenegro, the inflation rate has taken a notable turn. In July, the prices of goods and services for personal consumption, measured by the Consumer Price Index, increased by an average of 1% compared to the June 2023. Additionally, consumer prices increased by 6.9% on average compared to the July 2022, reflecting the evolving cost dynamics. Now, the European Commission's initiatives towards sustainability and digital transformation. The Commission has initiated a co-creation process for the retail ecosystem transition pathway, aiming to catalyze the green and digital evolution of the retail and wholesale sector. Eurocommerce, the European Retail and Wholesale Association, commends this endeavor, recognizing the sector's significance as a private employer and a technology adopter. Recent data releases for July have fallen short of expectations, giving rise to a new set of challenges. The National Bureau of Statistics report was particularly notable for omitting the unemployment rate among young individuals, a rate that has recently reached record levels. According to economists surveyed by Reuters, retail sales increased by 2.5% in July in China, according to the previous year, falling short of the anticipated 4.5% growth. Next, we delve into the monumental impact of Russia's invasion of Ukraine on European energy markets. This ongoing conflict has reverberated across global energy dynamics, affecting both short and long-term trajectories. The intricate interplay of post-lockdown energy demand and geopolitical upheaval is explored, showcasing the ripple effects on supply and demand. Europe's strategic moves towards reducing reliance on Russian gas and embracing renewables are outlined as nations grapple with energy insecurity and climate change. A stable equilibrium becomes an essential endeavor. Our focus now shifts to Germany, where investor morale is showcasing signs of improvement. The ZEW indicator of economic sentiment for August has edged up, standing at minus 12.3 points. This slight increase by 2.4 points compared to the previous month reflects evolving perceptions amidst a complex economic landscape. Crossing over to Slovakia, we witness in Slovakia positive economic growth dynamics. The country's GDP growth for the second quarter has exceeded expectations, showing an increase of 1.5%. A significant trend emerged in the Turkish real estate sector. After a period of consecutive declines, housing sales in Turkey have taken a notable turn. July witnessed an impressive 16.7% year-on-year increase. And however, it's important to note that sales to foreigners continue to exhibit a downward trend. Amidst post-earthquake impacts, shifting investment landscapes, and inflation's ripple effects, the market continues to navigate these changing dynamics. Now let's set sail for Malta, where the maritime sector's potential is taking center stage. The CEO of Transport Malta emphasizes the sector's pivotal role in the nation's economy, highlighting collaboration and sustainability as key pillars. Challenges like climate change and international agreements are faced head-on as the sector aspires for growth. Malta's commitment to sustainable production, ecotourism, the blue economy, renewable energy, and marine biodiversity is underscored. However, the country also grapples with competition from its non-EU neighbors. Turning our attention to Hungary, industrial production has experienced a continued decline. June witnessed the sixth consecutive month of reduced industrial output, with a decline of 6.7%, illustrating the challenges faced by this crucial sector. And lastly, in Denmark, the second quarter's economic expansion has moderated. The economy grew at a slower pace, easing to 0.2%. This nuanced economic landscape reflects the intricate balance of global dynamics. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.